Good day to all Inderes TV listeners and viewers. Tecnotree published its Q2 results yesterday, and we will discuss that and some other outlook-related questions with the CEO Padma Ravichander and CFO Inderes Vivekananda. Welcome.
Thank you.
Thank you. Thank you, Ronnie. Good afternoon to the viewers.
So we could start the interview by first going through some major deals that you made in Q2, for example, the 7-year deal in South Africa and mobile operator deal in UK. So if you could go through the deal structure, revenue distribution timeline, and currencies involved, how do these deals contribute to order book growth, and also how will this impact your frontier currency exposure? So many questions, but let's go through them one by one.
Thank you, Ronnie, for the question. Yes, 2025 H1 has been a historic 2 quarters for Tecnotree. We have had a pivotal performance in terms of our financial performance, operational excellence, taking market share in different new markets, growth markets, and improving our stack capabilities as well. The big news was the 3 major wins in Q2, which helped us move away from frontier currencies to more mature markets, especially Europe, and bring long-term stability to the company. I'll go through each of the 3 major wins, the first one being a very strategic partnership with a telecom private network core network provider who provides connectivity not just for telecom operators, as they are an operator themselves, but go beyond that to adjacent markets in manufacturing, sports, travel, tourism, fintech, and so on. They create sub-brands and create multi-tenancy. They have their own cloud infrastructure. We have partnered with them with our digital stack. It's a very strategic partner to enter new growth markets with new opportunities, to go beyond connectivity and provide capability for digital transformation in these industries and enterprises. It's also enabled more by the fact that people are moving more towards cloud in order to have greater AI capability in their business to improve and accelerate productivity and customer acquisition. And additionally, the abilities that 5G provides in terms of integrating IoT services and other connected device capabilities in these mature markets is going to give us a great digital dominance along with Tata in this partnership in these markets. The second opportunity that we won was our foray and entry into the European market with a very leading tier 1 MVNO player, where we are providing our stack for them to automate, digitalize, and move and spread their market share in multiple European countries, initially starting with UK, Netherlands, Belgium, and Germany, but then extending beyond to other countries and regions as well across the continent of Europe, but also maybe moving into the US markets. So the MVNO growth business is a big business. The industry is booming for telecom operators to do wholesale, to expand their wholesale footprint in the enterprise market with MVNO players that provide sub-brand capability. And our digital investments that we have made in the ecosystem play our AI intelligence-based layer that is providing dynamic capability for customer acquisition and campaigning definitely will increase the spread that these MVNOs get from their network into the regions. So this is also a very strategic win for us. The last one is a tier 1 operator in Africa, South Africa. It's a emerging market. It's quite an established player, and we have several opcos under that group. So we are in a very good position to deliver. It's a 7-year contract for total digital transformation to replace 4 of our competitors' products across their business lines. And it involves licenses, delivery capability, as well as ARR revenue across the 7 years. Since we have been there, done that, I'm quite confident that our ability to deliver and meet their business demands is we are comfortable with enabling them into the digital transformation process. More importantly, in all of these deals, Ronnie, we will see a growth in our localization of our businesses. Increasingly, customers want certain capabilities to be delivered locally in an agile way, meeting the market requirements of the region. So we will also see that we will have to invest to grow some of these new opportunities.
Could you still talk a little bit about the currencies involved? So how will this impact your frontier currency exposure, these deals?
Maybe Inderes, you want to talk a little bit?
Sure. Hey, Ronnie, as Padma mentioned, in all these deals, it is not just you deliver from one place and you implement from the other place. All these deals will have a lot of localization, which means that there is already a natural hedge built into these orders. So what I can call out is the localization from the trade and cost perspective. We get a natural hedge to de-risk our foreign exchange exposure. And also, as you can see, we have maintained our guidance on the free cash flow generation. I think that is what we can confirm at this point of time.
All right, so we could now move on to the Q2 performance. So if you could go through that in a nutshell first.
Sure, I can do that as well. Thank you. Yes, we announced our results yesterday for the H1. And as we published, our operating margins probably is the one I want to call out in the beginning. It's at a very high at 28% compared to 22.8% in the previous year. Net sales in constant currency increased by about 2.7%. Again, we need to keep in mind the growth, what we achieved in constant currency is higher than the industry average. However, we did have to suffer the exchange loss of about 4 million compared to 2.5 in the previous year, mainly due to the weakening of the dollar. And another highlight I want to say is on the free cash flow at 2.1. Again, this free cash flow is on the real terms, not on a constant currency, in spite of having a high dollar devaluation. And Padma mentioned it's a historic quarter. Yes, order backlog being increased by 45% and crossing 100 million is, I think, one of the major achievement in this quarter.
Given the strong order book, so what's the cash flow profile and overall, when do you expect the growth to materialize in revenues and cash flow?
Probably I can take this as well, Padma. Yes, this is still an early stage. These are all, as Padma mentioned, 3 large orders what we got. They are multi-year orders. We are still in the early stages. There's a huge impact on the order backlog. And as we announced, all the deliveries will commence in Q3 and Q4 of this year. And we are sticking onto our guidance. In fact, we did increase the guidance from low to mid to high. That is what I expect the impact will be on our financials for the current year. And also my cash flow guidance, in spite of weakening of the dollar so far, I'm going to continue and I'm going to stick to the guidance. So this is what I can say, that these will be the positive impact of these new orders on our performance for the current year.
Are you able to talk anything about years to come, for example, next year? Should we expect then the growth to materialize more?
I think it's too early. Normally, we do give the guidance at the beginning of each year based on the directions from the board. I think we will do that so once the board finalizes the plan for next year and we are able to give the guidance for next year.
Of course. Regarding the Q2, was Q2 exceptionally strong in terms of sales, or should the investor expect this sales momentum to continue?
I don't see it as exceptional in the sense that this is something unexpected or happened all of a sudden. There is a demand we see that our products are pretty stable, and we continue to see the demand for our stable and standardized digital platform And we are confident of capturing the market share in the mature market. Already Padma explained how we are planning with the new MVNO market, and our stack is already into the developed markets. I think we have reduced our forex exposure in the frontier currencies. We are growing in a highly developed markets. I think we are also into growth in cloud and MVNO, multi-year large deals we have struck. I think these are the things which will help us to stably grow our revenue over time. Again, reiterating, our guidance we have increased, and that's what we want to stick on to.
With recent personal rationalizations, but a very strong order backlog, are you confident in your delivery capabilities? So what's your strategy for scaling operations to meet the demand?
So I guess I will take this question, Ronnie. Of course, we have a stable stack which has more than 4,500 out-of-the-box features, and we are continuously adding new features to the stack faster than typical competitors do in the market, mainly because it's the way the stack has been built with open standards-based technology, open source technology, and cloud nativity. So this definitely gives us the momentum. The other area where we took very early investments in 2022 through acquisition of an AI company is to lead with an AI momentum on the stack to advance the speed and delivery capabilities and scale growth, and also to ensure there is an OpEx control that we had already promised can be delivered. So these were some of the levers that we had used. And scaling to new countries and localizing will require extra investment. I don't doubt that these new deliveries will need more capability on the stack, and also a more regional capability to be focused to deliver in some of the new European markets that we are entering. So we will have to make those decisions as we go along.
That makes sense. Then one question from our forum. What's the future vision with the Tata collaboration? How are you monetizing your AI patent portfolio? And are there new revenue streams emerging from your IP assets?
So the Tata relationship is extremely important. We created a product portfolio strategy. We have timed mark to market in a very, very critical way across the CapEx spend to revenue that we have managed over the last 5 years. There has been significant CapEx investments in 2021 through the acquisition of Cognitive Scale, and then expanding the stack to integrate ecosystem play, and then integrating the 137 patents that came with the acquisition, and converting those use cases to telco enablement cases gave us a 5-year advantage in our AI capability on the stack compared to our competitors. So we are definitely monetizing the AI capability that we have already launched on the stack since 2023, and improving our capability to deliver faster internally in the engineering area, but also to the customers. Definitely, we are bringing best of breed use cases to improve their business intelligence and their customer intimacy. Data monetization is a very important aspect of the network capability that telco customers today want, and our use cases are helping them monetize their network even further. So the demand for AI continues overall, as you have seen. And I think the marketing intelligence we have added on our platform, both for consumer and enterprises, will allow us to promote very specialized bundles to their customers, as well as increase the intelligence in terms of how we campaign and personalize the offerings to various customers in the market. The next big hurdle in artificial intelligence comes in the area of trust and governance. There is a lot of concern, a lot of topical discussions that's going on about trust and governance with AI. And here, telcos being a high-risk category, they are exposed and concerned about the misuse of AI. Tecnotree is already having tools, technologies, models for very secure governance of data. And we believe that we expect to realize some of the benefits with that strategic advantage in the next 5 to 7 years in AI as we go forward. And especially in Europe, the trust and governance with our certified product is going to be a critical game changer for us.
Lastly, we could discuss the CCD situation. Are you still expecting to collect the cash from these, and do you actually, in a way, need them? You have a healthy cash balance at the moment, and your free cash flow has improved. So, also, if you could discuss your, in a way, capital allocation strategy and what do you plan to do with your cash balance?
Sure. Yes, we do have a healthy cash balance. And as we announced when we launched the CCDs, which was approved by the shareholders and the board, the CCDs were never meant for operational usage. It was always meant for either the loan repayment or for investment in the R&D or to do an inorganic merger and acquisition. As a company, we constantly evaluate the internal ROI versus the cost of dilution. And as of now, the situation is same. The FIJRA had committed to invest before December of this year. I have not heard anything contrary to that. And our intention is always to remain free cash flow positive after all the investments. And I think when we get into that situation, the board will take the appropriate any decision that is necessary, and then we come back to the shareholders.
All right. Thank you for your answers, and I hope you all the best for the rest of the year, and let's catch up later.
Thank you, Ronnie.
Thank you.